Welcome to another episode of A Day in the Future. Our today's guest is an entrepreneur, angel investor, pro bono fundraiser, professor, speaker, author, and he's currently leading the way through different organizations towards decentralizations through blockchain. Born in Romania in 1977, moved to Israel in 1988, and then to the US in 1992. He's been featured in USA Today, Forbes, and many numerous media outlets. He's created the first closed-end crypto hedge fund, TAS, and I'm very happy to have him today in our podcast, Mike Costache. Thank you very much for being here today, and I'm really excited to start the conversation.
Great. Thanks for having me. I actually didn't create TAS. I was just an advisor to TAS, to Token as a Service, the fund. They were actually a sponsor of our conference, and then we became friends. But there were 4 brilliant Ukrainians who created this amazing first crypto closed-end fund, and I was proud to be part of it.
Oh, okay, understood. So you've been a supporter, a very big supporter of the first crypto hedge fund.
Yeah, I was an advisor.
An advisor. Okay. Thank you for clarifying. Today we are going to talk about how blockchain is unifying society through decentralization. And I'm very curious to learn more about your experience in capital investment and fundraising along the years. How has this been changed through blockchain and decentralization, and what the world will look like in the future due to this?
Big topics.
Yeah, we'll have a lot to talk about.
Mm-hmm.
So let's start with the first question. What's the most obvious proof of how blockchain has been changing the world in the past 10 years, if you were to look at society in general?
Yeah, lots of use cases. There's close to 20,000 cryptocurrencies, and each one has its own purpose. Obviously, most of them created those crypto assets to raise capital to then build what they thought of building. So there's a big confusion in the world out there between security tokens and utility tokens. And obviously the governments have stepped in to try to regulate this over the last decade. But to me, the most important component was the capital raising part of it. So in 2017, Token as a Service, TAS fund was created specifically to give all the tokens to shareholders, to token holders, who trusted the fact that a team was going to manage their money. That's called a membership token. You know, back then in 2017, if you went to Wikipedia and you try to type in, token, you would see 3 types of tokens. Today, everybody talks about utility tokens and security tokens, right? But back then, there were 3 types of tokens, and we were the only ones that created a membership token. Why? Because we took all the tokens and we gave them away to people that gave their money, mainly Bitcoin and Ethereum. They gave at the time about 35,000 Ethereum and 4,500 Bitcoin. So at the time, about $7.6 million worth of crypto assets. So to me, that was the first eye-opener. And it was right around 2017 in the beginning. Now, if you look at what happened in America from 98, there were companies called directstockmarket.com, directpublicoffering.com in 97, 98, that tried to decentralize the capital raising mechanism because it's very expensive to hire an investment banking firm to create all the documents, the private offering memorandum, and then ship it out via FedEx and track it and give it only to accredited investors. And that whole process is very, very expensive and cost and it takes a lot of time. So you go from that to all the venture capital investments, to accelerators, to incubators, and then you have what eventually became known as the Jobs Act that Obama signed in 2013 and Congress passed in 2016 for crowdfunding. Right? It was just a way to create a little video about the smartwatch or whatever, if you remember, Pebble Watch, and then people would just send in their little bit of money to pre-buy that product, right? So it went right into 2016. It was becoming very, very big in terms of raising money through crowdfunding. And then it became crowd selling because you were selling a token. And then you had to explain to people what was a token, what's a smart contract. And that whole confusion, and some people got it early on. And that to me was the biggest eye-opener as to how fast. I remember January 2017, there was this lady, and she raised, I think it was 3 million in 17 minutes. And that news caught my eyes. I said, what do you mean she raised 3 million in 17 minutes? It normally takes months to prepare all documents. And that's when I woke up. And then that was January 2017. And then by March, TAS was formed. Around the 30-day period, TAS raised its money through what was called an ICO, initial coin offering, blockchain capital on, I think it was April 10th, 2017. So right in the middle of the 30-day period of TAS's ICO, blockchain capital said, look, we're raising a $10 million fund in Bitcoin. And I think it closed in 6 hours. And then they converted that Bitcoin into the US dollars because they were a security token. So it was the first ever security token. And it's obviously done very well since then, that fund and then other funds that are within the blockchain capital's umbrella. So that to me was the most important part as to how I got into blockchain, about how to raise money by utilizing this new technology called blockchain, which people are still confusing even 5 years later. The blockchain is a technology and cryptocurrency is a crypto. It's a utility. There's a use for it.
It's a use case of the blockchain and what it can do.
Right. It's like the internet, and then you have different applications or different websites that allow you to purchase or do certain things, like a calendar invite service. It's a utility of the internet.
Exactly.
Yeah.
So just to sum up, like the answer would be, instead of months, looking into raising capital, you can do it in 17 minutes. Yeah, that's big.
Because there's capital everywhere, in everybody's pockets. But how do you take $5 from this guy and $500,000 from this person and $30 from this person, and you put it all into one pile for the purpose of what the team told you they would do with that money? And then how do you monitor that team?
That's the...
Right. So again, TAS looked at this and we said, okay, if we could show you an audit, we use Grant Thornton, of this Bitcoin address, this Ethereum address, this Tether address, right? There was three addresses where all the money went into. You can see when it starts and when it finishes. And then we said, why don't we show people how what we're doing with that money, how we're trading it, or every investment. So we put a press release, but then you have to believe me that if I say invested $100,000 in this company, you cannot call the CEO, or you could try, but they may not answer. So I said, let's show that address in the press release. Now people could click on it and see that you transferred $100,000 worth of Ethereum on this day, on this minute, from this wallet, where the 4,000 investors gave you the money, to this one startup. And then when you exit, when you trade it, or you decide to completely cash out from that position, all of that information is publicly available. And then we created the cryptographic audit technology. And that allowed everybody. And we thought, what a great invention. We spent the money to create it. It wasn't that sophisticated. And we thought everybody was going to use it to show transparency. And nobody wanted to use it.
Yeah.
Because nobody wanted to be transparent.
Exactly.
They wanted to claim, look, I'm raising 10 million. I have 2 million from private investors. But how do you know they really have it? Maybe they're lying to you. And a lot of people did.
Yeah.
Right?
Yeah, because you want to use FOMO, or you want to use...
exactly.
I know that's one of the...
So that was a big eye-opener, is that here's the technology. We did it. It's all transparent. Hey, take it for free. We thought we could make even a business model out of it, but we realized, why don't we give it for free to everyone? And nobody wanted to use it. It's the same thing in beauty pageants. I created a software that allows people to see how every one of the 12 judges are voting. And you can see, contestant number 1, I gave her, this judge gave her a 2, this judge gave her a 4, and then you tabulate all that. None of the other countries wanted to use it because people want to use politics and other self-interests in everything that happens in this world. That's why this world evolved as it did, with lots of secrecy and lots of this person needs to know, this person doesn't need to know, and this is what is amazing about this new evolution of the blockchain, with the blockchain, that more and more transparency is being afforded to a lot of people.
This is the exact challenge that I see that blockchain is going to be able to tackle. But what I see is that you need to bridge the gap between transparency and regulation for the ones that have been trusted.
Mm-hmm.
And those are the areas in which smart contracts, but like really complex smart contracts.
Sometimes when you give too much transparency, regulators look at it and they interpret that as they want, and they come and create trouble for you because you were too transparent. So this world, as it has evolved, some people learn that too much transparency is not good, because regulators come in and all they care is conviction. They care about their resume. Yeah, sure, they care about protecting poor people's assets and other people's interests, but really what they care about individually, they care about one more bullet bullet point in their resume. So when they leave working for the government and they work in the private sector, where they normally get 3 to 4 times more money as their salary, they look like they were a tough prosecutor, which is great. But many times they come in and they destroy lives of entrepreneurs who risked to be creative and then to go and try to create that business model. So too much transparency sometimes can backfire and be used against the founding team.
Exactly. That's the fear of them. Well, what I was saying, through regulators, not necessarily have the same regulators as we have them now, but no, replace through technology regulations, like the constraints in which you can actually make use of the funds, create the business and so on, have them be regulated through blockchain, through smart contracts.
Right. Yeah.
That's the next challenge, which I think it's a bit more complex, but that's what will help us get to more transparency.
Mm-hmm. Yeah.
So you were talking about 3 different type of tokens. Can you please tell us like what's the difference between them, just so everybody can get it?
Right.
Like utility, membership, and you were saying.
Look, there's a very simple formula. If you haven't yet built this glass and you're telling me, please invest in my idea to create this glass, okay, that's not a utility token. That's a security, because you want to use my money as an investment vehicle to go do whatever your idea is.
So you get part of the part of the business.
Right. So if this already exists and you're saying, hey, buy my token, which is a utility token, and with that you could buy this, or you could buy the water in it when you go to the coffee shop, that's a utility. That's when the product already exists. But most products or services don't already exist. Teams have ideas, they need the capital to go attempt to build whatever they thought, and that's why there's a gray line, and there's ways to define what's a utility and what's a security token, but that's the easiest ways. If you don't have the product or service yet, it's a security, because you want my money as an investment vehicle to go create what your brain thought of. If it already exists and you want to sell me a token, which I could then go to the coffee shop and buy coffee into the cup, and all of that exists, then it's a utility token. Very simple. And a membership token is when you give all the tokens away to the members, to the community, and you are the manager of that community, but you don't own any of the tokens. So that way your interests are very easily explained to people through the smart contract. This is how much money I make. This is when I make my money as the manager of this. And then the community can trust, because they own all of it. If you look at any of the 20,000 tokens, those that have a better or less trading, and not less trading, less fluctuations, is because the community believes that they control the future of that token and that idea and that concept and that brand. But when the management has too much of the tokens in their own treasury, the community says, but wait, this price is pretty fake, because they could always come and dump a lot of tokens and become wealthy, which has happened many, many times to different exchanges, to different market makers. Teams give their tokens away to create hype, and then they sell their own because there's no real regulation. If you're a publicly traded company on NASDAQ and you're a director of the company, you can only sell 1% of your personal ownership per quarter. And that's the way they regulate it. So that way you don't become greedy overnight and say, I'm done with this business, I'm tired, I want to cash out, go live on a boat. And then the community is left with no management. They created this concept, which the community bought into their idea. So it's
Exactly. These are the types of things that will need to be tackled through blockchain as well, because they haven't been so effectively been tackled up until now.
That's part of the transparency.
Yeah.
If you know how to read the smart contract. Not everybody knows how to go and find the smart contract of a token and then actually know how to read it.
Yeah, well...
That's why there's auditing companies that get paid $10, $15, $20, $50, $100,000 to audit the smart contract. But then you need to know how to read the audit of the smart contract. So you still need to be a fairly educated person if you want to not complain about what's happening.
Hopefully it does not get back into more bureaucracy, because it was about the speed that, and the fact that you can divide significantly the time it takes to raise investment. But hopefully bureaucracy and audits and so on will not take us back to just only have a different form of vehicle, but actually invest the same amount of time.
Yeah.
And are there, because you were saying membership tokens?
Yeah, but nobody's executed on a membership token besides TAS.
Oh, okay.
TAS is the only token that I know in the world that told investors, token holders, whatever you want to call them, give me your money in this period of time, then I'm going to show you an audit by a trusted party. In our case, it was Grant Thornton, fourth biggest accounting firm. Then we're going to get listed on exchanges, and then watch as we give you the news about which investments we make, why, partnerships, investment deals, and so forth. So 76 press releases in 2 years, and I could tell you the reason why nobody has ever tried to do this is because nobody wants to offer this much transparency, number one. Number two, I don't think there will ever be another membership token as such, as an investment fund or any other purpose, because you could look at it, there's no direct correlation between the price of the token and the good that we did, and we told the world through nicely written press releases, because people didn't care how much good you do. All they cared about is their greed, satisfying their own greed. How many tokens can I buy, and when is it going to go up 3-4 times or more, and for me to sell?
Yeah,
that's all that people care about. That's why so many billions of dollars have gone into these 20,000 cryptocurrencies in the last 11, 12 years, because of the personal greed of people wanting to make 3, 4, 5, 10 times their money or much more in a very short period of time. If you didn't have this greed component, it would have taken many, many more years for blockchain as a technology to develop and so forth.
So this was actually a good catalyzer, in a way.
Sure.
A good catalyzer for actually experimenting a lot on what exists. And
some people are quoted famously for, greed is good. It depends how you want to interpret that and when you want to say it. I don't always like that quote, but in this case it worked. Greed was good for getting so many more people into this. Lawyers wanted to make a lot of money from it. Advisors wanted to make money from it. Event organizers, technologists everybody wanted to be part of this. That's why so many people went into it. It's interesting to me to now see some people that 4 years ago I thought would never go into this because they were so conservative. Oh, this is a fad, it's going to go. And now they're living off of only clients in the blockchain space.
Yeah, well, in 2 years, how many things have, since the start of the pandemic, even one with blockchain and cryptocurrencies in general and with digitalization in general, I feel like 2 years, in 2 years we've advanced 10 or 20 years in
terms of the market cap. It went from 1 billion to 3 billion, now back to 1 in the past 2 years. So it depends what metrics you're analyzing as to how we advanced.
What I'm saying here, I would look at how many people, in the general population, get an understanding of the concept. How many people?
I don't think you should classify it as an understanding of the concept. I think you should classify it as how many people took some fiat currency and bought some cryptocurrency.
Exactly.
And then what they did with it. I think that's the way you should.
Not understanding, but getting in contact.
That doesn't mean they understand, but at least they made the step. It's like many years ago when they went from using gold to using paper, and it took some time, and then from paper to credit card, and from credit card to then cryptocurrencies.
Yeah.
That doesn't mean that people understand how the credit card. I have a 6-year-old daughter. I say I have no more money on me. She says, "But Dad, you have your phone. You could pay with the phone. You can't, right? Does she really know how it works? No, she just saw me so many times use the phone. Beep beep, and then she gets the toy. That doesn't mean she understands."
Well said. Well said.
Yeah.
No. I was referring actually to people getting in contact with using that, or not understanding, but actually seeing the concept, becoming a normal part of society easily, and with digitalization. But it's got nothing to do with blockchain. The fact that more and more people got to do only video conferencing, and so that was a really quick
adaptation.
Yeah.
Mm-hmm. People adapt. There's this thing: adapt or die.
Oh yeah, that was.
We survived as a species over 8 million years or 8 billion years, because we adapt to things. So
Yeah,
when we stop adapting, then we'll perish, and there'll be another civilization that possibly will exist. But so far, this human species has done pretty well.
That was actually, as I've told you, the subject of the previous episode, and that was one of the lines.
Yeah.
Yeah, adapt or die. That's.
I didn't watch it, but good to know.
Yeah. Okay, so regarding blockchain and the current challenge, what do you see as specific? I mentioned the fact that maybe more regulation within the technology might tackle some of the challenges that exist. If you were to name some few challenges, what would that be?
Challenges when it comes to regulation?
Challenges when it comes to effectively investing through blockchain mechanism. Challenges in gaining the trust of the shareholders or of the investors. Challenges in being sure that the ones that get the money are managing it correctly.
It's mainly reputation.
Reputation.
A lot of the early teams were people with no biographies. I mean, you didn't know who they were, but they were just smarter. They understood the technology, so they knew how to manage a community. There were people that made a lot of money by managing a community for teams that had a good idea, right? But if you look at those people, they're experts in that specific field. But if you were to try to use their biography in a private offering memorandum and try to raise money the traditional way, every investor would say, "Who's this person? What's their background?" "Oh, they have 6 months background in community management." Yeah, because that's all they needed to understand. It doesn't take long to understand different parts of the capital raising for a blockchain startup, and that's why they didn't care about their back. When I went to my first conference in February 2016 in this space in Amsterdam, I asked everybody that I was meeting what's their background and where they went to college and where do they live, and they were all they were mainly nomads. So they couldn't answer, they didn't want to tell me where they're from. Okay. They didn't want to tell me their last name. Mainly they had a hacker type name on their badge. And to me it was an eye-opener. But first I said, who are these people? They're like, dark web people that are coming out for a conference to meet other people,
Yeah.
So it's reputation. It's that's the way you get to have a better safety net of what you're investing in, is the reputation of the person.
Because it's like a really interesting fact at how Bitcoin, like the main cryptocurrency, who's the backer, who's created,
We'll never know.
Exactly. That's really interesting because.
But do we know who was the first person who said? I mean, we know from history it was a Chinese emperor, but do we really know who was the first person to use paper as fiat currency? Does it matter? So many hundreds or thousands of years later?
Or why?
Do we know who was the first person that used gold?
Or why was gold the one?
It doesn't matter who and why. It matters that it exists, and then more people buy into it, and then it becomes part of trade.
When enough people trust it and use it and becomes part of the reality in transactioning with it, it's reality.
That's right.
Yeah. So if you were to look at cryptocurrency, it's actually just another part of the evolving form of trade of value, because we started with barters, then with gold, then with coins, and so on, and now we're getting to a more efficient way of trading value, and that's a challenging aspect, especially with the hype that's been like in the four.
I saw an ad about this whole hype with play to earn, right? And it said work to earn. And it was so funny. So we've been doing this for a long time. You work and you earn.
Yeah.
And now they're making this big hype about play to earn. So all of these buzzwords exist for 6 months or so. If you look at the last 25 years of the evolution of capital formation, everything, whether it's mobile and then it's social media and whatever the buzzword is, venture capital funds and angel investors flock to it because it's cool and sexy. And then there's the Me Too's, and there's too many people. Groupon was a great concept of buying certain discounts. And after Groupon, there were probably 20,000 people that copied because the barrier of entry was very low. With a few $1,000, you could create that website, and then you have to get a sales team to go to the restaurants and all the other venues. And people found out that it's not that easy, but they tried to do it. I mean, just here in Romania, I remember there was 170 of them in 6 months. And they were all competing, and they all died. And there was only one left. So it happens in every industry. Same thing. That's why we have 20,000 currencies. Why do we have a couple million apps on the App Store? Because people came up with all sorts of ideas. But then eventually one becomes Zoom, and that becomes the brand, right? And one becomes, the Calendly or the calendar invite. And then those brands own that space. And that's it.
If you were to look at the crypto space, what are the defining elements that you believe will either make them successful or not? Or what do you think that reflects a real store of value for the future, or a real not necessarily store of value, but mechanism for exchanging value? Because in the end, that's what needs to be as a really trusted, currency.
Some people argue that Bitcoin is the most credible store of value, and others are still looking for the next Bitcoin. Some people believe it's Bitcoin Cash because a lot of people are using it to actually trade, whereas to buy products and services. So I don't exactly know how to answer your question.
Like, what would you look at? Like, if you're to, I don't know, if you're like a supporter of Bitcoin as the main crypto leader in the future, or
I don't consume my life like some people do to go out there and claim that this cryptocurrency or that crypto. I don't. I look at these people and it's entertainment to me how they're so convinced because they own a lot of it.
Well, you need to be convinced in that case, like.
Right, but I don't think my purpose on life on this planet is to try to convince anyone to do anything. But I watch these people who become well-known, Mike Costache, Alex Machinsky, and other people. I appreciate them. I enjoy watching them fight for their beliefs, but,
now that
only time will tell.
I agree.
So, why should I sit there and fight for it? Because when you fight for something, you really believe in it, but mainly they believe in something because they own a big chunk of it, so their personal net worth is tied to that asset, that crypto asset.
Yeah.
That's
a way of putting your money where your mouth is.
Sure. But there's other things to do while on this planet for a short period of time than to fight for a certain belief in a certain crypto asset. But again, everybody does what they want.
Because you touched this subject, I usually get into this as well. What's your personal why in what you're doing right now? What's your personal why? Why are you active in leading the way towards decentralization through blockchain?
I only led the way through certain conferences that I helped put together. So I'm not, leading anything other than some conferences which brought together about 1,400 speakers and 30,000 people. That's how I found my way of understanding this world and trying to do something positive.
Well, in my opinion, building awareness around it, it's part of leading the way. Like,
sure.
Multiple people are leading the way, and My question.
But I always said I give people a microphone and a nice stage for them to express to the world. You said that was my function. Yeah.
And what's your personal why behind it? Why do you do it? Or because you were talking about purpose, and that's what I wanted to explore.
Why I got into this?
Yeah.
Because it finally made sense to me. All of these things that were, I was in college, and right after college, I worked for 3 different investment banking firms and venture capital funds, and I know how hard it is to put together all the documents and how costly it is, and to me, this was an amazing way that I could see with my own eyes, the decentralization of the capital raising process. So that's why I got involved with it, because there's so many ideas out there. One of my internships that I did when I was in college, I worked for a company called the Invention Convention. So they would organize in Los Angeles 2 annual big invention, and they would have a few hundred inventors. They came there with their patents or with their ideas, and they would meet lawyers and advisors and capital and investors. And that whole process was you had to have money to buy a booth to showcase your invention, and then you had to try to see who's trying to steal it from you, because a lot of people try to steal other people's ideas. So as a young person, watching all of these great, brilliant scientists or ideation creation people, and then how hard it was for them to find all the pieces to take and make this glass and put it on the shelf for people to buy. To me, that's my why. I thought this is a great way to match capital with ideas, with teams.
To shortcut capital to innovation, basically.
Yeah.
I believe that as well.
Because I always believe that there's more capital resources than good ideas that are ready to absorb that capital, right? And a lot of entrepreneurs, when they're trying to raise money, you're stuck because you go into all your network, and to extend the network, you go to events, and you try to create a funnel of investors. And at some point, you get stuck, like, okay, who else can I pitch this to, right? So you just have to be creative about it. And that's why the whole process of raising money online decentralized all that and democratized all that. Because somebody could hear a value from a press release or from a conference or from some friend forwarded them your website, and boom, that person can read everything. They don't need to call you. You don't need to pitch for an hour or 2 and follow up and do diligence. And they would just see and then click, send you a few Ethereum or a few Bitcoin or whatever it was, and then get your token and then just hold it and wait to see what you do with it. And hopefully you do something good. But again, most cryptocurrencies out there, there's no direct correlation between all the look at Elrond. Look at hundreds of partnerships, and look at their trading volume and their trading price. Every time they put a positive press release out and they announce something, it should go up always. Why doesn't it go up?
For me, it's hard to answer.
There's many reasons. And it was the same thing for this fund, TAS, with all the tokens being owned by everybody besides the management. Why did it go from 80 cents to $3 to $12 to 23 cents to $1.23? If you look at the price of it, and that's why we eventually wind it down. There's no direct correlation between the price of a token and the good that the management tells the world that they are doing.
Only between the...
It's all about greed, and it's all about trading. It's all about so many other things, other than there should be a direct correlation between the positive that you announce, what you're doing or what you're about to do, and the price going up. There should be more people buying it based on the positive news. If it's negative news, it should go down. It's obvious. But it doesn't happen like that.
What other aspects? Because, okay, news, positive or negative news, now in our age of information.
Yeah, you don't know which one is fake news or not. Yeah,
exactly. That's a challenge.
Yeah.
But what other evidence, okay, of positive good that you're making can be directly correlated with in the future?
It's whatever the team tells you that they're doing, or they've just closed the deal, or they're planning to do.
I agree.
And then people should analyze that and use their brains and decide.
Okay. Because this is the area in which I believe that blockchain should, it's vague for me, it's gray, but I believe this is the area in which it should help through its technology to actually bring further evidence in what the team members are saying, in what they are doing, so that you as an investor need to spend less time in analyzing yourself, and making decisions, because there's already technology that's what can be made as a decision already makes it for you.
Yeah.
Yeah. You were saying about capital investing. I tried to look back in each episode of our podcast at what was the early beginning of that domain, and from what I know, the first big capital investments were made when Portugal and Spain were exploring the USA, because like the reasoning behind it was that, okay, it's a really big opportunity there. We need to tap on it.
Yeah.
And I think that's the same mindset that's been applied throughout history. Whenever there's a new opportunity, a big opportunity for people to tap on, that's when a lot of money is being brought in by capital investors in order to have high return on investments and volumes.
It's greed.
Well, it's greed, yeah. But it's what is greed and what is productive? What's the difference between greed and productive return on risk? What I'm trying to say, okay, there is greed, but what do you think can be defined as productive return on the risk that you're taking with the capital that you're investing?
It's different people make different decisions based on the knowledge they have access to.
Okay.
So, but like I said, there's always a greed factor because they want to replicate the assets they have. They want to have more. And before you have any assets, you raise money from other people and you convince them to stories. So,
why I'm asking about greed, in my view, maybe only in my view, has a negative connotation sometimes. But again, you mentioned the quote. But
there's nothing wrong with people wanting to have more. What's wrong is when they cheat and when they steal.
Yeah.
And when they don't tell you the whole truth and they hide the certain truths.
Yeah, that's already that's already in a really, really bad and dark place when you're playing with
That's why there's regulators. So that's how as society evolved. That's why you have people that come up with ideas, people that have capital, they match it with the ideas, and then you have regulators that come in either before or after there's an issue with the investor complaining to the regulators. And sometimes the regulators try to prevent too many people coming to complain to them because then it will clog the system, and that's why they try to be proactive. But even there, the regulators have their own greed factor of putting people in jail and convicting people and fining people, so they could get their names in the news. And whoever doesn't believe that that's one of the reasons why they do it, if they believe that regulators are out there just to do good for all the citizens, that's great. It's a great, beautiful view of looking at the world.
I think
do a little more psychoanalysis on that and take away their ability to have a prosecutor's name in the media when they do something good, when they find someone, and see if they will still do it just for the sake of doing it and nobody knowing that they are the ones who did it.
I think it's about incentives and success metrics that aren't...
Everybody is on a different career path, But everybody always wants more so they could have less work and they could enjoy life more and have more financial freedom.
Yeah, well, minimum output with maximum output, it's something that everyone...
Yeah, and many people waste all of their breathing moments trying to accomplish that. And it's okay for some people, but that's pretty wasteful overall. If you look at the why the human species is here is not to accumulate more assets and then this bodysuit dies and then you take nothing with you wherever we go after the bodysuit dies. So,
What do you think that life should be about?
Everybody should make their own decisions.
That's clear. Yeah.
Sometimes You chase certain things, and then you realize when you get them, or if you don't get them, that it was or was not worth it, and then you move on to another level, another stage of your life. But whoever sits there and tells you in a podcast or an article or however on a stage, this is what life is about, they try to become priests. They try to become, a know-it-all. Nobody knows everything, and if somebody tells you they know everything, you should run away from that person.
I agree. I agree. Because you said you should make your own. I think putting it into different words.
The same thing with religion. I think people should be allowed, or parents should allow their children to study all religions and let that human soul, as they get older and more mature and more intelligent, to choose a religion or choose to believe pieces of different religions.
But it's about exploring yourself, like authentically, originally, and just being you.
Exploring the world externally, exploring yourself internally. Yeah.
That's what I think. Like it's not about telling people what life should be about. It's up to them, and I think that's what life is. It's up to you. It's whatever you want it to be. Because you were mentioning about what do you look when making investments? Like what?
I heard this when I was 18, and I've heard it over and over, and I've seen it, and I believe the same thing I believed, many years ago. A technology by itself, a piece of code, or whatever it is, if it doesn't have a good team behind it, that technology doesn't just work by itself. Look at Uber. It worked great for a while, and then when management started having issues, the CEO and so forth, then it lagged. Then you change the CEO, and the shareholders put in some new management. So people who say, I want to invest in that technology, they're just shortcutting their conversation piece, but it's really they're investing in the team.
And what are good indicators of great teams in the beginnings?
Everybody looks at the background. The reputation, but it's been proven now many times that people with no background are able to come up with a great idea. I met the founder of Snapchat when he was just pitching in Los Angeles in 2011, and I had just switched from a BlackBerry to an iPhone, so I didn't really know how to use an iPhone. I had it for 2 days, and he was showing me, how Snapchat is going to work, about sending a picture, and he really said, if you're 14 and you have a girlfriend and she's trying to, flirt with you and you're at home, you used to sit on the phone and talk to each other. And, I used to do this when I was 14 and 15, just talk for hours and hours with a girl that I was trying to have as my girlfriend, or was my girlfriend. And he says, but nowadays, this was 2011, he says, now a girl will take a picture of her nipple, but doesn't want to have her face in it, and will send it to the guy, but doesn't want this guy to then show it to his friends tomorrow in school, so she'll decide on a timer between, 10 seconds and whatever it was, 10 minutes, and then it disappears. I said, but why would you send a digital asset, like a picture, to someone, and then it disappears? And to me, it didn't make any sense. And now it's a multi-billion-dollar company, and he's worth, 10 billion himself. And he was a young guy who had no reputation, no background, I think he was still a student. He was 19 or 20. So there's lots of missed opportunities out there if you just look at the criteria. I need to see your background. You must be this age and you must have these degrees. So I don't believe in that. I believe that there's, the 4 guys who created TAS Fund, when they came to me, they were 21 to 28 years old, and they had no backgrounds. You couldn't Google them. You couldn't find anything about them. But they were good people. I met them. I met them here. I met them again in Dubai. We got to know each other, and I said, okay, these are good people. And whatever they're showing me in an Excel spreadsheet that they did with some few $100,000 in terms of Bitcoin trading, I started to believe that, And then they created a big reputation for their personal brands because of the good that they did with the fund.
So in this case, it's proof of what you're able to do, like you were mentioning the Excel sheets and what they did, and that brings more trust, and that makes...
Right, but that wasn't enough transparency to show people we are the capable team. Give us your money, and we will spend it properly, and we'll show you transparency. People have to, to believe in it. You understand?
Yeah. Regarding Snapchat, I think that one of the reasons for why it got so successful is because from what you mentioned,
it's called porn. That's why it became so successful.
Yeah, but he really understood the problem. Like that was a problem for teens. Like that really was a problem, and he really.
I didn't think it was a big deal because I was 30, whatever. I was 32, and I said, okay, if it makes sense to you that people are going to care to send a picture and then it disappears, and you decide for how long it exists on that person's phone. Actually, my question to him was, I said, listen, I just got this iPhone, and I see that if I click 2 buttons, it takes a screenshot. Mm-hmm. And he said to me, we're working on dismantling that. And I'm looking at this 19 or 20-year-old guy, and I'm thinking, you're going to go against, I think Apple at the time was not the trillion, but they were a few $100,000 market, a few hundred million market cap company. Mm-hmm. And I'm looking at him and thinking it was very loud. It was a restaurant, and there was all these, startup booths, and I wanted to go meet all of them. And he didn't have a booth. He was just walking around. So I was like, okay, some guy who crashed in this event of angel investors and people that have a booth, and he's trying to show me something. And I said, good luck to you. And I went to the bar and I got a beer, And then, of course, when I saw the Facebook offering $3 billion to buy it and then going public, of course, you look back and you say, wow, things could have been different if I just said, yeah, maybe you're right. Mm-hmm. But I just disregarded what he was showing me because I didn't understand. And for somebody to tell me he's trying to get away from me, the user, clicking 2 buttons and taking a screenshot and saving that picture in my mm-hmm. picture folder, I thought he was,
Yeah, but again, he really understood the problem with how teens are exchanging photos right now and how you want to avoid being,
Lots of great examples out there that people didn't believe,
That's a really good story. Okay. Let's talk a bit about the name of the podcast, A Day in the Future.
Yeah.
And how do you see tackling effectively those challenges and actually being able to do whatever comes as an obstacle for implementing blockchain transparently and trustworthy? How do you see a day in the future in capital investing, maybe? Like what that day in the future would look like? And when I say a day in the future, we can look at the most farthest away day in the future.
Right. Well, today, 5 years after the first mm-hmm. 2 funds that were tokenized, blockchain capital and token as a service, there's thousands of funds out there, thousands. I just joined the advisory board of a fund of funds that invests $250,000 to $1 million in different funds. Mm-hmm. Okay, raise money from investors who, if I only have $50,000, I can't call up a $400 million fund mm-hmm. and say, can you take my $50,000 because they don't take anything less than $5 million, for example. Mm-hmm. Or if you want to put your money in a $30 million fund, they won't talk to you if you don't have at least $100,000, right? So when it comes to where it is today, just 5 years later, there's thousands of funds. Mm-hmm. It's even harder to track and decide which ones to go approach if you had. A lot of people reach on LinkedIn. There's 700 million people on LinkedIn. They go and they type in a few keywords, mm-hmm. venture fund, angel investor, and then they just blast everyone through emails or through direct connections, or they ask for people to connect them. So in terms of capital raising, everything changes every day. Every week, there's new ways of raising money. There's new buzzwords. So it's a never-ending cycle. And if you're not on top of it, when you come back a few months later, if you go on vacation, if you get out of the business, you feel lost. Mm-hmm. Okay, so that's the biggest challenge that I see, that both investors, angel investors, fund managers, mm-hmm. and the idea creation, the entrepreneurs, have to be constantly in the know of where money's going.
Awareness.
And normally you get the best idea of that by going to conferences and hearing what people have to say and then meeting them privately. But a day in the future with where blockchain is going is pretty tough to explain, because there's so many facets of life that people are trying to solve, so many problems or perceived problems, mm-hmm. right? With all sorts of brands and ideas that they create. The most successful ones, Binance and anything that's trade related, mm-hmm. right, or infrastructure related, they will capture a lot of capital faster than, should we take I remember this in 2000. Somebody said, my family owns a business in the mortuary business, and and he created webcaskers.com. And he was trying to raise $5 million to make, the biggest marketplace of of anything related to mortuary services in America. And that seemed like a great idea, right? But is there really need for me to go,
Look on a marketplace for that.
Yeah.
Yeah, it's different problem that you have.
Right.
Yeah, you're not used to going on a marketplace for that. But usual days for people, in a 4-day in the future, how would the usual day change due to blockchain?
Everything will be so different.
And in what way? For example, I don't know, even transactioning at the store will be significantly different, I believe. Well,
let me give you an idea. Okay, Let me give you an example. 10 years ago, I had some friends that really work hard, raise a few $1 million, and they try to create what today is Calendly. Okay? But they try to do so many things with it that they confuse themselves, the team, and the investors. So, 10 years ago, there were a few people that invented, but most of the investors that we met, they said, wait a second, I'm going to give somebody a web link, and they can see all of my schedule, when I'm available, when I'm not available. I said, no, only when you're not available. But that means I have to put a lot of work into putting all my, and most investors said, nobody's going to do that. And today, there's millions of people that use Calendly as a way to send somebody a link and say, choose a time in the near future, in the next week or two, when you're available, instead of back and forth with text messages or WhatsApp messages. So could we have envisioned this 10 years ago? A few of us in a team in Los Angeles, I was an advisor to this company, and it failed. And then a few years later, you have this multi-billion-dollar company called Calendly. I think it's worth $3 billion now or something like that. So again, how will a day in the future be in 10 years or 5 years based on how the evolution of blockchain is taking place? It just depends on which facets of life you're looking at, whether it's transportation. The first time I ever heard of Uber in September 2011, my friend in Los Angeles said, oh, come meet the CEO of Uber. He just raised $44 million Series A, and Jeff Bezos invested in it. I was like, and again, it was the same time when I just got the iPhone. I said, what? How can you have an app about taxis? Taxis are physical assets. What does an app have to do with it? At the time, and Uber started, I think, 2009, so it was already 2 years old, and people were using it. And he gave me his business card, and I couldn't understand. I felt really stupid in that circle of people because they understood what was happening. And I went to the bathroom, and I said, well, let me Google this. So I Googled a bunch of things about Uber and Bezos and 44 million, the little keywords that I heard. And I was trying to understand how this works. And I had to download the app and see how it works. So, and today I took an Uber to come see you, and it wasn't even a thought about how I'm going to get here. So everything changes in every facet of life based on, and people embracing technology.
Yeah, I think the more we move into the future due to technology, the variables or the different paths that we can take just multiply and multiply and multiply.
Yeah. I think the biggest challenge is keeping up with all this, because it's very, very, very hard, and it's overwhelming because you don't have peace of mind. You want to go sit on the beach, or you want to play with your young child, and your brain is spinning on what are you missing. Yeah. So it's like a, you have to constantly calibrate yourself to stop caring about all the technology and where it's going and how it's changing life and how you could benefit from it, both as a utility and financially, if you could be an investor in some of these technologies, and then live in the now. I think that's the biggest challenge that society will face, is how do you focus on today and enjoying whatever that is, whether it's a coffee with a friend or you're at the beach or you're whatever you're doing, and this need to constantly be on top of technology and how can I make money from this? How can I be an early investor or early adopter, right? That's a big challenge.
How do you deal with that challenge, with this challenge?
I know how I deal with it at my age.
Yeah,
I don't know how younger people deal with it, because I see a lot of confusion. They become more robotic. They become more, I mean, there's a human body. If you cut here, it bleeds. But if you try to reach into their soul and try to have a meaningful conversation, sometimes it's not so easy. So it's up to the parents to raise their children and take them into nature and cut off the technology. Why are parents telling their kids, don't get on the iPad or the iPhone or whatever, or don't watch too much TV? Because all that digital information is not just brainwashing, it's affecting the way they think. And after a certain age, it takes over. And once they believe a certain set of rules or values that you didn't help bring them the right values, they were influenced by YouTube, they believe that that's the truth. The same way people used to go to churches or synagogues or whatever their religious place, and whatever that high priest or religious figurehead said, they believed that.
Yeah.
Until they had access to other information.
That's what's forming your reality.
Yeah.
Yeah. Well, what I try to do is just, meditate. Like start the day meditating, and you can start your day in your own.
There's a great school in Miami that a new friend of mine has invested $45 million to build it. It's called Chetner Academy. That's his last name. And
sounds really
the mascot of the school is a bee, like a cartoon. It's a bee. It's in the meditation.
A bee.
Yeah, and all the kids, 300 kids. Okay, it's a private school in Miami. All the kids start with meditation. Damn. They meditate for 10 minutes at 8 a.m. and then they start the school. That's pretty cool.
It's really cool.
And that's because him and his wife and they believe in this, and they brought it to their young daughters. He bought the school and renamed it and rebranded it because he didn't like the way the school was run when the pandemic started.
When did it start? This way of doing it? I'm just curious.
When the pandemic started, around that time, is when he bought it, rebranded it, and yeah.
And it's called how?
Chetner.
Chetner.
Centner. Chetner Academy.
Okay.
Yeah.
I'm
So imagine that. There's a school where all 300 kids from 3-year-old to 18-year-old, they start by meditating for 10 minutes, and then they start school. That's evolution to me.
It is.
But it took a private person, invest in a school, and then say, these are my values. If you like my values, send your kids here and pay this fee. And that's pretty cool.
I'm really curious how it will unfold, like in a few years, and how, like, I believe what it will help most is you as a child, as a human being, finding that inside of yourself what you're about easier.
Yeah.
Okay.
So I didn't give you an exact answer about the day in the future because there's too many variables. But it will be more complex than today, more challenging than today, and it will be easier for the human soul to get lost in the future.
Okay, that's.
So it's up to us to raise our kids the right way, or the right way that we believe is the right way. There's no such thing as the right way.
I'm gonna ask this. This is the thing that helps everyone get some practical advice. What do you think we can act on now in order to get there, in order to be able to avoid getting lost in that huge amount of information and actually
stop being so greedy about trying to make money on the bandwagon of this cryptocurrency thing, because that's why you invited me to talk about it, and I did as much as I could to avoid discussing the technology called blockchain or the cryptocurrencies, because all that information is publicly available. What is not available so easily are these type of messages about where society is moving to, and it could be moving in the wrong direction if we don't teach our next generation set of values about human trust, human loyalty, and these issues that may seem, not so important. They're the most important thing.
So it's about being humans and not forgetting that in the process.
Look at all these crazy people trying to raise, they have raised all these funds that are investing in all these metaverse concepts, right? And they're trying to take the human body into, today with the, Oculus, whatever, into a virtual world, to live there as many of the non-sleeping hours as possible.
Yeah, I know it.
Now, I could say it's frightening, I think it's crazy. I'm not going to say any of those things. It's obvious. Most people are not saying it. It's the same way people wore their stupid mask for 2 years and they were brainwashed. And yes, many people died because of COVID. No, it exists. It's a real virus. It was disastrous. But everybody was brainwashed into wearing. To wear it in your own car while driving from point A to point B, I'm sorry to say, you are wacko. Okay? But nobody said it to them. Why? Because there was an interest to sell the mass and so forth. And it was better for people to feel comfortable, whatever that meant, than to revolt against their local governments or whatever. So it's the same thing with this. If we allow people to invest so much money into metaverse concepts and put more and more things into the virtual world, we're going to eventually live there, and this body will have less usage, less utility.
Yeah.
Okay? And over there, it will be much easier to get money out of people for whatever services or products or time or experiences they provide to them, which is nothing wrong with it. But I think it's not so cool to go live into a digital world so many hours of your non-sleeping day, because that's not what the body was made for. But it's part of evolution. It's happening. More and more people are going into that. You and I are already digitized anyway, right? You found me through LinkedIn. You already read and Google and pictures and videos. Those are pixels that came to your eyes. Yes?
Yeah.
So before you met me physically, I was digitized in your mind about who I am. When you meet me, then you start understanding, okay, he's like this, he's like that. Right? Same thing for you. Before I replied to your message, I first read everything about you. Okay, so do I really know who you are? No. Did it tell me anything about your soul, about your purpose of being on this planet, about your loyalty, about your friendliness? Not much, right? Because it's all digitized.
Yeah. That's the thing.
So that's a day in the future, if you want an answer. It's going to be more and more and more and more and more digitized. And if people stop meeting and feeling each other, then it will be just an image of what I believe you are.
Yeah.
But is that the real you?
Yeah. I think we are losing ourselves. Like that's the most valuable thing that you have in this life, being yourself. And by the constant digitization of life, that's what we're easily losing, because the best universe in the metaverse, but that's my opinion, it's the one that we're currently living, and
it's a part of the evolution. It's a part of the experiment. It's part of the journey. So I am embracing it, but at the same time, I think it's going to be going in the wrong direction if more and more and more people go into living virtually. But if that's what they want, that's what they'll get. Now, a young kid doesn't know what they really want. They're just bored, right? And they're trying to do something with this is cool, let's go there. And they get trapped. Maybe it's a pleasant trap, but still it's a trap. When we came out as a human species out of, depending on your religious outlook or lack of religion outlook, when we came out of the oceans, it was the same thing. At one point there was nothing outside the ocean as living life, and then it came out. So this is just part of evolution. It's just into the virtual world, not into a water and then land. Which those are also, the land could also look like a virtual world to a fish.
Yeah.
Right?
Different dimensions, different discoveries that we're going into right now.
So embrace technology, but be on the cautious side of the negative aspects of it. Everything we do from the time we're born till this bodysuit doesn't exist anymore as a breathing entity is trying to figure out the good and the bad in everything. In everything. Everything is a duality. What's good, what's bad, what's good, what's bad, what's good, what's bad. All day long. That's all we're thinking. Was it good for me to come here on your show? Was it good for you to invite me on the show? It's like every single decision, everything. Was it good for you to wear that shirt and for me to wear the shirt? I don't know. Right? But everything we do is like, sure, and then you're pressed against time, and then you make a decision and you go with it and you hope to make the best out of it. Right?
So would it be taking decisions with more awareness regarding yourself?
Sure. That's good advice.
Awesome.
Be more aware and put more knowledge in your brain and have access to more people so you could ask, is this right, is this wrong?
For you, again.
For you and your family and your community and for the evolution of the human species. You should always be worried about your micro and then your macro aspects of life.
I agree.
Yeah.
Thank you very much for the advice.
Thanks.
And that's the final part of today's episode.
Cool.
Thank you very much. It was a great conversation.
Great.
Got to learn more about tokens than I knew before.
Okay.
And can't wait to talk to you next time.
Great.
Thanks.
Thanks.